It has been an eventful week, with the banking sector causing jitters across stock and bond markets this week. The closure of Silicon Valley Bank last Friday resulted in a volatile session on Monday, as traders turned to who is next and which regional bank may be vulnerable. You can see from this table who has the highest percentage of uninsured deposits. SIVB here, Silicon Valley Bank, with 88% collapsed last week. And Signature Bank collapsed on Sunday with 90% uninsured deposits. One of the banks that has been under pressure this week is First Republic Bank, with 68% of deposits uninsured. That has the next largest uninsured deposit base, so becomes an obvious target for short sellers, and you can see that from this chart, as the share price has been tanking. Despite this, the Nasdaq 100 held the key trendline support. I called this out in my last video that we would retest this area. I also mentioned downside levels to watch were the key trendline and 11,680. You can see the low here tagging 11,680. Now, as long as price held this key trendline, it would be considered a successful backtest and nothing more. The turnaround in the Nasdaq 100 was driven by a couple of factors. The first being the Fed stepped in and effectively protected all depositors in failed bank SVB, and it made additional funding available for other banks. The second factor is the expectation of rate hikes has completely fallen away. Goldman's even came out stating that the Fed will not move on rates next week. That has helped push tech stocks higher, which are more sensitive to rate moves. Tuesday we got a sigh of relief and a follow-through rally. Price retested the 200-day and didn't look back. We had US CPI for February coming in line with expectations at 6%, but no one really cared as the focus was firmly on the banking sector. Facebook also helped the Nasdaq 100 higher after the company announced it will lay off another 10,000 jobs. Wednesday was then another volatile session driven by Credit Suisse, and it was driven by this headline. The bank's largest shareholder, Saudi National Bank, said it could not provide any more funding. Shockwaves hit the market and Credit Suisse shares plunged, and its credit default swaps, which I called out in my last video, well, they just went vertical. At one point, the pricing of Credit Suisse default swaps were implying a 47% probability of default. That said, the Nasdaq 100 remained an outperformer, putting in an inverse hammer candle as it hasn't got banking stocks in the index, which helped. Tech stocks this week have almost been a defensive play as traders dump bank and oil stocks. The market turnaround, which helped create the inverse hammer candlestick on Wednesday, was driven by this headline, after the Swiss National Bank was ready to provide liquidity to Credit Suisse. Have a look at this chart. It compares the regional bank index, the S&P 500, and the Nasdaq 100. You can see from this chart, the regional bank index in blue has been leading both the S&P 500 and the Nasdaq 100. But up until Wednesday, the Nasdaq 100 diverged and it has been an outperformer. The S&P 500 in orange has tracked the regional banks more closely, and it's this index that has been driving the indices and sentiment this week. Thursday, stocks rallied as the Nasdaq 100 held the 20-day moving average here at 12,180. This was driven by reports that a number of banks were providing liquidity to First Republic Bank. 30 billion in deposits was the figure being quoted in reports. Look at the regional bank index make a low. That was the trigger for indices to rally. Treasury Secretary Janet Yellen also came out saying the banking system is stable and that customer deposits are safe, which further helped sentiment. On the same day, the ECB raised rates by 50 basis points despite the ongoing concerns around the banking sector. The ECB refrained from signaling future rate moves in its statement, and from that, the markets are now pricing in a terminal rate of 3%, which is where rates are right now, suggesting the ECB is done raising rates. This further helps stocks move higher, and central banks easing off the rate hikes will help stocks. Today, however, you've got price cooling off after the Nasdaq 100 tagged near-term resistance, with this short-term trend connected to the high from the start of Feb. So far, price is holding support of 12,455 to 60, which is the level I quoted as resistance a couple of weeks ago. Since then, price has pulled back from this level last week. Holding this as support into the weekend will be a positive for the Nasdaq 100. Other levels to watch on the upside, 12,655 will act as resistance. Above that, and it's 12,940 to 13K, which is a major resistance level. On the downside, support is 12,455 to 60, followed by 12,170. Looking at the bigger picture, on the weekly, we continue to remain above this key trend line, which price broke above on the 1st of Feb. Despite everything that has happened this week, and I've said this before, as long as we remain above this key trend, it will keep the selling pressure capped. Continue to focus on price, particularly with the Nasdaq 100, which is not influenced as much by the banks. Next week we have the Fed, and that will set the tone for the rest of the week. We've had the Fed balance sheet rise this week by nearly $300 billion. The first rise since the pandemic, which has injected liquidity into the stock market. The Fed is not expected to go big next week, with only a 25 basis point rate hike expected. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.